This is the Rush Hour with Kenya B. We usually broadcast on SF Tunes Radio, and we also go FaceTime Live, but unfortunately Facebook is down. So guess what? You get to have our presence here today. So we're here with DJ Shane. He's on the one and twos, and we're going to be starting our broadcast. So I hope you all enjoy our new show, The Rush Hour with Kenya B. Thank you for tuning in to the Rush Hour. This is your host, Kenya B. Um, so today, as you know, it's Wednesday, it's Hump Day. We usually are on Facebook Live, but for whatever reason, Facebook is down. So we are not live on Facebook at this time. But we did start a broadcast on YouTube. So if you want to see us, you could tune in on YouTube and you're going to follow Real You Studios page. REELYOU Studios. And you'll be able to watch The Rush Hour with Kenya B live tonight. Also, you have the opportunity to listen in live on the radio. And, I'll be on Facebook too, communicating if you want to ask questions or anything like that. But, these things happen. You get little hiccups in your broadcast, but that does not stop the show. All these things, entertainers, when things go wrong, they don't stop the show. As you can see, those professionals like Beyonce and Christina Aguilera and Ariana Grande, they have hiccups in their performance, but you know what? They don't stop the show. So that's why we are not stopping the show. So we are also on Anchor, so you could tune in then. Hello, this is The Rush Hour with Kenya B. Thank you for tuning in on Anchor. Yes, so what I was saying is we had a little hiccup today because, Facebook is down. And, that's where most of our viewers and listeners tune in to hear The Rush Hour with Kenya B. But we decided to go ahead and try out YouTube. It'd be our first time on YouTube. And, hopefully you guys like all platforms. We'll try to get on all platforms simultaneously. That would be great. But for now, we're on Anchor. We're on SF Tunes Radio. And now we're streaming live on YouTube. So please tune in. You could go on, like I was saying, the page is Real, REELYOU Studios on YouTube. Just type that in your search menu and my page should pop up and you should be able to view it. If I could get the link, I will also post the link as well on the commercial break. It's Wednesday, it's Hump Day, things happen, this is what happens. Sometimes your week starting off goes really smooth, and then sometimes you just have some bumps in the road. And unfortunately, we run into a little bump, but that doesn't stop us, like I said. So I appreciate those who are listening in. If you are tuning in on SF Tunes, I appreciate you. If you are listening on Anchor, I appreciate you. And if you're watching on YouTube, thank you. Thank you for changing your platform. I appreciate that. So let's go to a commercial break, and I'll start giving you those links so you could be all set up and listening, watching, and all those great things. Okay, so I'm going to go ahead and go to a commercial break. sftunesradio.radiostream321.com, right?
Yeah.
sftunesradio.radiostream321.com. I don't know how to put the link.
What happened?
I said I don't know how to add that link. Radio stream. Let's see.
I might have to go in the description.
Oh, okay. What the heck happened just now? Just delete that. Let's see. Get the link from YouTube. Probably can't do the link from YouTube yet. Really? If you guys want to listen in on YouTube, you could tune into sftunesradio.radiostream321.com. That's where you could listen into DJ Shane's Top 20 Countdown and while we're on our breaks.
You ready?
Yeah. Thank you for tuning back into the Rush Hour with your hosts. Thank you for tuning into the Rush Hour with your host, Kenny B. So I'm adding those links onto Facebook so you can tune in. We're currently live on YouTube if you would like to watch us on YouTube. So we're live on YouTube right now. And if you guys have questions, I'm here on Facebook. If you have questions on how to tune in, I have posted some links. I wonder if I could post the link for the live. Let's see. Nope, they don't have a live link. Let's see. Can I share? I think I can. Oh, I could share. This is great. I'm learning something new. So I'm gonna post the live. Let's see. Let's share that on Facebook. So yeah, we're just this is like threw us for a loop today, you know. So I want you guys to tune in. Please tune in on YouTube. Um, so today, let me start with the topics. First topic we're going to talk about is we're going to talk about the student loan debt, the loan forgiveness program. Now, President Trump, he wants to have a reform on the student loan forgiveness program, and that is going to affect a lot of people, you know. So I'm going to go ahead and read the article on what his changes are, and I think it's going to be very, very detrimental to current people in the public service field. So this is according to marketwatch.com, and it's on many platforms. But this article is by Julian Behrman, and this is what the article states. A student loan forgiveness program for public servants could be on the chopping block. Government funding for low-income students who work campus jobs could be slashed, and students attending short-term career-focused programs could be eligible for government grants. There are some of the White House proposed changes to the student loan system released this week as part of President's fiscal year 2020. It's unlikely these pictures will come to fruition. White House budgets are largely political documents outlining an administration priorities. Still, the plans into the approach the administration brings to college, affordability, and student debt. Like earlier, higher education proposals for the White House and congressional Republicans, the 2020 budget plan prioritizes cutting and streamlining higher education and student debt programs as a way to save money. But the proposed cuts to tune of 207 billion over 10 years are likely to be a non-starter with student advocates and congressional Democrats who worry that slashing fund sources for low-income students or eliminating options for loan forgiveness will make it harder for students and borrowers to afford the cost of college amid the nation's 1.5 trillion outstanding student debt. The Trump administration tried it last year. They got about as far as this year. Robert Keckland, a professor of higher education finance at Seton Hall University, said of the White House approach to higher education, now that the Democrats are in control of the House, it will never happen. Here are some of the higher education proposals the Trump administration released this week. Eliminating the public service loan forgiveness. As part of the budget, the White House proposed eliminating the PSLF program signed into law in 2007. That allows borrowers who worked in government and some nonprofits to have their loans forgiven after 10 years of payments. This marks one of a few instances the Trump administration has floated the idea of eliminating PSLF. The first time officials proposed slashing the program sowed panic among teachers, social workers, and others who rely on PSFL to manage their debt. Challenges implementing the program already have borrowers skittish. About 28,000 borrowers were part of the first cohort of borrowers to apply to have their loans forgiven under the program, and just 96 actually had their debt wiped away, a rate of less than 1%. Borrower advocates say a combination of too complex requirements and student loan companies sowing confusion about them are to blame for borrowers' challenges assessing the PSLF. Still, borrowers likely don't have to worry about the program being eliminated anytime soon. Getting rid of the program will require an act of Congress, and it's sometimes something Democrats are loath to do. Even if lawmakers were to move forward with Trump's proposal, it would apply only to new students. Loan borrowers take out debt after July 1, 2020. Changes to student loans. Right now, federal student loan borrowers can choose from several plans to repay their debt, including a suite of income-driven repayment plans that allow borrowers to pay off their loans as a percentage of their income. Under the current system, borrowers using an income-driven plan put either 10% or 15% of their monthly discretionary income towards the student loans and have the option of forgiveness after 20 or 25 years. The White House proposal combines all the income-driven plans into one option where borrowers pay 12.5% of their discretionary income for up to 15 years if they only have undergraduate debt, and up to 30 years if they have graduate debt. This plan is similar to what then candidate Trump proposed on the campaign trail. The budget also floats eliminating subsidized student loans, a type of federal student loan where interest does not accrue on the debt while students are in school. Subsidized loans are issued to borrowers on a sliding scale based on income, and so eliminating them would make repaying debt more costly for low-income students. I mean, I'm sorry, this is terrible. If this is not an attack on lower and middle class, I don't know what else is, because we're already paying so much, especially people who live in New York. We pay so much living in New York City on top of the high education costs. And, many of us need our financial aid, student loans, all those things to even pursue our education. For most of us, some parents are not able, to pay their child's education. So it's very frustrating. And even when you do get those student loans, now, they had implemented this whole income-driven program where it goes by your income on what your payments are calculated to be. But like the article said, the Democrats are in the House, so hopefully this doesn't come into fruition. But the fact that he's proposing it is just so frustrating, because there's so many people who are struggling. Like, what is this? Like, from what's happening with the tax proposal, that's hurting the middle class. I don't know if it's hurting people who are under the poverty line, but it's definitely hurting the middle class. And it's I don't know what really more to say at this point. It's like, now in New York, it's like, in order to survive, you're gonna have to work 5 jobs to just keep all your income afloat, and to be able to pay all your bills. It's getting like really frustrating, so this is what's happening. And I'm also caught in that whole web myself, because I have to pay back my student loan soon too. So if I'm hoping like this program still stays in effect while I'm having to pay my student loan debt back, but this is just getting out of hand, and I bust my behind. I work a lot, and it just seems like, I don't even know what to say anymore. It's just ridiculous. So we'll go ahead and go to a commercial break, and we'll go on to the next topic. It's just crazy.
Where, but if you pay a little bit at a time, isn't it like it's okay if you pay a little bit at a time, like once in a while?
I mean, they want you to pay. Okay, like for instance, for me, I have to pay like 700 a month. They want you to pay $700 a month. You know?
That's crazy.
So yeah, it's crazy. I don't know.
Like I thought you could just, pay like a little $20 here and there or $50.
No, because then even if you paid like a lower payment like that, the interest accrues.
All right.
You still have interest that compounds on top of that loan.
Mm-hmm.
So it's like you'll never pay that loan back.
Yeah.
That's why That's why what you were saying is like
Yeah,
people.
like it follows you to the
Yeah,
grave.
it follows you to the grave. It's crazy. It really is. Do we have any? How many we got here?
3.
It's crazy. Thank you for tuning in on YouTube. I appreciate it. You guys are awesome. But yeah, this is unbelievable. I'm just so frustrated. Like nobody's frustrated about this. Like this is serious. Like what is gonna happen? Like say if this does go into fruition, like what's gonna happen to the middle class? What is gonna happen to the middle class? Like we're gonna be poor? We're gonna be like I don't know. Soon what? The housing market's gonna crash terribly. That's gonna be another thing that happens. It's just like one thing after another. It's like, aren't we supposed to be in a better position? Like this president is a businessman. Okay, he's a businessman, but he should be helping America. You know, I don't know what type of business dealings he's doing, but like we should be doing better, not like
especially the
hurting, especially the
it
middle
looks
class.
like the people that have been doing fine all along that's the only people getting help.
That's the people who are getting hurt. Exactly. And we will, like I said, middle class America was fine for the most part. But I think people are gonna have to start having 2, 3, 4, 5 jobs just to survive. It's crazy. Unbelievable. I wonder if people could comment. Oh yeah, people could comment. Let's see. Let's see.
You ready?
Took me about 10 years to pay off my student loan. Yeah, I hear you, David.
You ready?
Mm-hmm. Thank you. Thank you, and welcome back to Rush Hour, and it's your host, Kenya B. We just discussed Trump's new proposal on eliminating the public service loan forgiveness program, which is going to really affect the middle class, those people in public service, teachers, nurses, police officers, military. These are the people who it's going to affect, you know? And I remember when I worked in the school system, there was a teacher. She was so frustrated because her and her husband, newly married, no children, and they both had student loan debt. And they, like I said, they're newlyweds, and so they were in the market of purchasing a home. So when they went to purchase their home, the bank denied them the mortgage because they said they both had a large amount of student loan debt, and their debt to ratio, and compared to their income, was they knew they wouldn't make it. They knew they wouldn't make it, so they denied the mortgage, and they were so frustrated, and I felt their pain. And at the time, I was not even thinking about home ownership or anything like that. But when I was going through my process of purchasing a home, again, a few banks, they really concerned about the student loan debt, and it definitely can. I mean, I understand where they're coming from because, you have to prioritize what, like, your necessities and your luxuries. So you have to come to a decision as to what things you're going to avoid having, those luxury items that you may not, I mean, you may want them, but you're going to have to, you won't be able to do both. So, that's the decision that you have to make. But it's unfortunate that people try to, apply for a mortgage loan and they're denied it because of student loan debt. And that shouldn't be. Something should be set up in place so people could at least get approved for housing. That should be key. But the banks don't want to take chance. They don't want to take chance on those clients. But yeah, I mean, it's unfortunate. It's definitely an unfortunate thing. So topic I want to go into is there's an article about a scandal, a cheating scandal that occurred at massive colleges. So massive colleges admissions cheating scandal snares Hollywood stars Lori Loughlin and Felicity Huffman. This is on ABC News. The article is by Aaron Katersky and Bill Hutchison and Mike Levine. So this just came in. Hollywood actresses Felicity Huffman and Lori Loughlin and a slew of chief executives are among 50 wealthy people charged in the largest college cheating scam ever, prosecuted by the U.S. Department of Justice, federal officials said Tuesday. Those indicted in the investigation, dubbed Operation Varsity Blues, allegedly paid bribes of up to $6.5 million to get their children into elite colleges, including Yale, Stanford, Georgetown, and the University of Southern California. Federal prosecutors said this case is about the widening corruption of elite college admission through the steady application of wealthy combined with fraud. Andrew Leland, the U.S. Attorney. Sorry about that, guys. So this case is about widening corruption of elite college admissions through the steady application of wealth combined with fraud. Andrew Leland, attorney, the District of Massachusetts, said at a news conference, there can be no separate college admission systems for the wealthy. And I'll add, there will be no separate criminal justice system either, Lulling said. Ringleader pleads guilty. Senator Elizabeth Warren, Democrat, Massachusetts, a presidential candidate, And a former school teacher expressed outrage over the scandal in an interview Tuesday with ABC News. This is just, Warren said to me, that just one more example of how the rich and powerful know how to take care of their own. According to Leland, the ringleader of the scam is William Singer, owner of a college counseling service called Key Worldwide Foundation and company called Edge College and Career Network. Singer allegedly accepted bribes totaling 25 million from parents between 2011 and 2018 to guarantee their children's admissions to elite schools, Leland said. The parent, Singer of Newport Beach, California, pleaded guilty in a Boston federal court on Tuesday on charges of racketeering, conspiracy, money laundering, conspiracy to defraud the United States, and obstruction of justice, Leland said. Stephen Massera, 69, the accountant and financial officer for the Edge College Career Network and the Key Worldwide Foundation, was also indicted. According to court documents, Massera and Mike Riddle, a private school counselor in Bradenton, Florida, alleged worked closely with Singer in the scam, according to the indictment. Michaelia Sanford, 32, of Folsom, California, another employee of the Edge College and Career Network and the Key Worldwide Foundation, and David Seidel, 59, of Vancouver, Canada, were also indicted in the indictment. Singer would allegedly instruct parents to seek extended time for their children to take entrance exams or obtain medical documentation that their child had a learning disability. Ooh, this is so bad. This is so bad. My goodness. Wow. So, I don't know. This whole thing is really messed up. Um, Singer would allegedly instruct parents to seek extended time for the children to take entrance exams or obtain medical documentation that your child had a learning disability. According to the indictment, the parents were then told to get location of the test changed to one of two testing centers, one in Houston and another one in West Hollywood, California, where test administrators Nikki Williams, 44, of Houston, and Igor Dvorsky, 52, of Sherman Oaks, California, helped carry out the scam, the indictment alleges. Riddle, 36, allegedly either took ACT and SAT tests for students whose parents had paid bribes to Singer, according to the indictment. Singer typically paid Riddle $10,000 for each student test, according to the indictment. Those charged in the probe included 9 coaches at elite schools, 2 SAT and ACT exam administrators, 1 exam proctor, and a college administrator, and 33 parents, including Huffman and Lachlan. Huffman's husband, actor William H. Macy, was not indicted, but according to the court document, he and Huffman were caught on a recorded conversation with a corroborating witness in the case, alleging discussing a $15,000 payment to ensure their younger daughter scored high on a college entrance exam. Huffman was indicted on charges stemming from $15,000 she had allegedly disguised as a charitable donation, or so her older daughter could take part in a college entrance cheating exam. The indictment reads, but Huffman and Macy apparently decided not to go through the scheme for their younger daughter. At a hearing before a judge Tuesday afternoon in Los Angeles, Huffman answered yes to questions from the judge and acknowledged she understood the charges against her. Macy watched silently from the front row of the courtroom. Huffman was released from custody Tuesday night after the judge approved a $250,000 bond for the actress. The parents are a catalog of wealth and privilege, Leland said. They include, for example, the CEO of private and public companies, successful securities and real estate investors, two well known actresses, a famous fashion designer, and a chairman of a global law firm. If you want to see the indictment, um, it's available. It's public information. It's available. You could go to abcnews.go.com and then type in the nationwide college admission cheating story, and you could see the whole federal indictment. And it's definitely unbelievable that this happened. Um, we don't know how far, because these actresses and big time people, they have good lawyers, so what they probably will serve some time, but I don't know if it's going to be some heavy time. But we'll see in the near future how the case, how this whole case unfolds. So we'll go to a commercial break at this time, and we'll go to the next topic. Thank you for those who are tuned in on YouTube. I appreciate it. I thank you very much for watching. I know this is a new platform, so we'll see how it will go. If this is something that we'll look into in the near future to do YouTube live. But I'm glad we have at least have this platform so we could still bring a live show to you.
You ready?
Mm-hmm. Thank you for tuning back to the Rush Hour with Kenya B. So, man, that is really something heavy. Um, the last story that I just covered with the whole scandal. We know that, people with money tend to get away with a lot of stuff, but I don't think the federal government is playing around with these group of people who try to scam, the college system. So we'll see. Like I said, we'll see in the future how this case unfolds. And I'll definitely be keeping my eye on this one and updating to see where this goes. Um, so, like I was saying, I was talking about in our previous article about, how your student loans can have an effect on you. Now, student loan debt is not one of those debts where you can get rid of. It's something that has to be paid. You can't put it in if you're trying to go bankrupt, file for bankruptcy. It's definitely something that can be applied to part of a bankruptcy because it's a federal debt. It's a federal loan debt. So But for all your other unsecured debt, your credit cards, um, your mortgage debt, your car note, all those things you can, if you're having trouble, if you're coming into some problems, you can do debt consolidation or credit repairs. Try to repair, well, do debt consolidation, and then in tune you could, repair your credit from there. So, with debt consolidation, what you do is you take all your debts, your loans, your the mortgage. You probably could do a refinance on your mortgage if you just call your mortgage company and they could do a refinance for you, probably get you a better percentage rate, which will bring down your mortgage payments. For your student loans, you could do, student loans, they have something where you could postpone your payments, but on top of that, if you postpone your payments, it's going to compile interest. So that is an option if you can't afford your payments, at a specific time, you can forbear your loan payments. But like I said, it will compile interest, so that debt will grow larger and larger. For your credit cards, you could do debt consolidation, and you could just take all your credit card bills if you have a lot of them, 15,000 or more, and you could put all those credit cards into one payment, so you don't have to be paying different payments for each of those credit cards. Now, I'm going to read something from Experian about credit repair. So what is credit repair? They have something called the Credit Repair Organization Act. The Credit Repair Organization Act is a federal law that became effective April 1st, 1997, in response to a number of consumers who suffered from credit repair scams. In effect, the law ensures that credit repair service companies are prohibited from taking consumers' money until they fully complete the services they promise, are required to provide consumers with written contracts stating all the services to be provided, as well as the terms and conditions of payments under the law. Consumers have 3 days to withdraw from the contract, are forbidden to ask or suggest that you mislead credit reporting companies about your credit accounts or alter your identity to change your credit history. They cannot knowingly make deceptive or false claims concerning the services they are capable of offering, and they cannot ask you to sign anything that states that you are forfeiting your rights under the Credit Repair Organization Act. Any waiver that you sign cannot be enforced. Okay, how to fix your credit by yourself. There's really no quick fix for your credit. Information that is negative but accurate, such as late payments and delinquencies, will remain on your credit report for 7 to 10 years. However, there are steps you can take to start building a more positive credit history and improve your credit scores over time. So number one, you're going to check your credit report. To get a better understanding of your credit picture and what lenders can see, check your credit report. If you need help reading your report, you can learn more about how to read your report through Experian. If you want to learn more about credit reports in general, you can read about credit report basics on the Experian website. If you find information that is incorrect, you can file a dispute. Remember, too, that items on your credit report that you do not recognize could also be potential signs of fraudulent activity. Someone working to secure a credit card in your name for their own use, make sure you're clear on items that could potentially be fraudulent versus those that are simply inaccurate. Improve your payment history. Your payment history is one of the most important components of many FICO scoring models. Late missed payments will reduce your scores, and public records and collections can cause significant damage. This negative information will remain on your credit report and impact your credit scores for about 7 to 10 years. Your credit scores often take into account the size and recency of your debt. The bigger your debt and the more recent your missed payments are, the worse your score will be. Bringing accounts current and continue to pay on time will also almost always have a positive impact on your credit scores. Know your credit utilization rate. Credit scoring models usually take into account how much you owe compared to how much credit you have available, called your credit utilization rate, or your balance to limit ratio. Basically, it sums all your revolving debt, such as credit card balances, divided by the total credit that's available to you, or total of your credit limits. High credit utilization rate can negatively impact your credit scores. Generally, it's a good idea to keep your credit utilization rate below 30%. For example, if you have $10,000 credit limits across all your credit cards, you should try to keep your total credit card balance below $3,000 to keep your credit utilization rate low. There are two ways to reduce your credit utilization rate. Reduce your debt paying off your account balances. Increase your total available credit by raising your credit limit on existing account or opening a new credit account. While increasing your limit may seem like an appealing option, it can be a risky move. If you're increasing your credit limit tempts you to use more credit, you can fall deeper into debt. Additionally, if you try to open a new credit card, an inquiry will appear on your credit report and temporarily reduce your credit score. Reducing your balances on credit cards and other revolving credit card accounts is likely the better option to improve your credit utilization rate, and subsequently your credit scores consistently make one-time payments against your debt will also help build positive credit history, which can have additional benefits for your credit history and by extensions your credit scores too. Consider how many credit cards you have. So, how much you owe across how many different accounts. If you have debts across large numbers of accounts, it may be beneficial to pay off some of the accounts. If you can, paying down your debts is the goal of many who accrued debt in the past. Think about your credit history. Credit scoring models like the credit by FICO often factor in the age of your oldest account and the average of all your accounts, rewarding individuals with longer credit histories before you close an account and think about your credit history. It may be beneficial to leave the account open once you've paid it off. Be wary of new credit. Opening several credit accounts in a short amount of time can appear risky to lenders and negatively impact your credit score. Before you take out a loan, open up a new credit card account. Consider the effects it could have on your credit scores. Know too that when you're buying a car or looking around for the best mortgage rates, your inquiries may be grouped and counted as only one for the purpose of adding information to your credit report. Oops. More options for credit repair. You can look for a credible credit counselor from the National Foundation for Credit, or the Debt Management Plan. So that is the National Foundation for Credit Counseling and Debt Management Repair. You can reach out for counseling and to help you with negotiating your monthly payments and consolidating options. So something to think about. If you want to know more about this article, please visit Experian, and you could go to their information solutions page, and it will let you know all these things. You could read it in detail, and it also has the where you could link to each, like going to the counseling service. They have links on the page so you could get into that. So feel free to explore that. You can also, to request your credit reports, we have 3 credit reporting agencies. So that would be Experience, TransUnion, and Expedia. So those are your 3 major credit reporting companies. If you ever want to view your credit report, you get a free report every year. And there's also great apps that you can use. Credit Karma is a really good app. It helps you to monitor your credit and where you are, your credit score, and then give you options like if you want to get a personal loan to consolidate all your debt. So those are like some of the options that you can do. I know for me personally, I don't want any more loans, so I'm just gonna pay down my debts as I go. So, all right, we're gonna be wrapping up the show. I just wanted to thank everyone for tuning in on YouTube and also listening in on SF Tunes Radio. Like I said, we had a little hiccup this time because Facebook Live wasn't available today, so we had to go on YouTube, which is another great option for us. So thank you for listening, and have a good night. All right, thank you two for tuning in. For those of you tuned in on YouTube, I appreciate it, and we'll be seeing you next week. Good night. Ooh, I didn't even get to say hello to everyone like I usually do because we're on a different platform, but guess what? We'll be back Facebook next week.